So, Paweł Dębowski, Head of Real Estate for Europe at Dentons. We apparently are the largest law firm on the planet with more than 6,000 lawyers. We have 800 lawyers on the continent with 200 plus lawyers doing only real estate across the entire continent. Poland, Czech Republic, Romania, Hungary, France, Germany, Italy, Luxembourg, soon to be continued, Russia as well, and Turkey, if you include it in Europe. So I will follow the drill. I'm responsible for serving investment and institutional clients, mostly in CEE, and recently also I've done a couple of transactions outside of CEE in Germany and the Netherlands.
Okay, great. Piotr.
Thanks. Piotr Mirowski, I head up the capital markets team at Colliers for Poland, but I'm also part of the CEE platform for investment that joins up the whole region for investment. We advise our clients on both buy and sell side mandates. In Poland, the whole office is 270 strong, but in our team we have 11 professionals that deal with the major asset classes. Last year we've done quite a few transactions, and probably the most prominent ones were the advisory on the acquisition of Key 22, as well as the sale of Access office buildings and Prosta Tower in Warsaw and Kraków respectively. We also advised on an acquisition of a big logistics center in Szczecin, and we're looking forward to this year. I think it'll be a very good year full of opportunities.
Okay, great. Martin.
Yes, hello from my side as well. My name is Martin Erbe. I'm heading the real estate financing team for Continental Europe at Helaba. Helaba is one of the biggest Landesbanks in Germany, with a balance sheet of roughly 170 billion euros. Out of that, roughly 34 billion is real estate, and out of that, 1.7 billion is located in CEE. Here in CEE, we cover Poland, Czech Republic, and Slovakia. That's it. We did last year something like 650, 700 million of new transactions here in the region, and including, for example, one of the biggest transactions, which was the EPP deal, EPP retail deal with 7 shopping centers, where we provided full underwriting of 185 million euros.
Great. Adrian.
Adrian Karczewicz, I represent Skanska Commercial Development Europe. And as you know, Skanska is part of the bigger group with 130 years of history. We, as Commercial Development Europe, are investor and the developer of modern, innovative and green office buildings. I represent the business for the CEE, so I can also answer some questions about Czech Republic, Romania, Hungary, and of course Poland. And personally, I am running divestments, so the buildings that are offered to investors, and I'm responsible for sourcing buyers for Skanska.
Great. Carlos.
Yes, my name is Carlos Piñerúa. Yes, as Richard said, I came to Warsaw 11 days ago. So the big question is why a Venezuelan who used to live in Zagreb and go to the Dalmatia for summers is doing in Warsaw. I was, like many of us, given an offer that I couldn't refuse. But I'm happy.
Country-wise or money-wise?
I am responsible for Poland and the country, the Baltic states. Thank you.
Great. Maybe just sticking with you, Carlos. How does the World Bank view Poland specifically? And I guess, although you've had limited time here, what are your sort of first impressions? What were you looking forward to about working in this area?
Well, for us, I mean, Poland is, the fact that I'm here tells you how important it is. How's that for an answer?
Exactly. They picked their best man to come here.
They did.
That is very true, Carlos, yes.
We see Poland as an important client for us. Partly because it's success for the last 25 years. We actually have an event in a few weeks where we will distill or try to distill the lessons from the Poland experience for a number of our countries. So in that sense, for the World Bank, Poland despite the concerns that a number of people have, that it hasn't been as successful as people aspired it to be, it is a success case for us, and we see it as an example for other of our members, as I mentioned. My early experience, it's been fantastic, frankly. I mean, I used to work in very dynamic countries, Turkey 10 years ago, Indonesia, very dynamic, Croatia, not so much. But my early impressions is that a very dynamic country, very fast-growing country, a lot of potential still. But again, it's something that it's good for the rest of the world to know what Poland has done in politics aside in terms of economic policy the last 25 years.
Great, thank you, Carlos. Martin, since you've got the microphone, let's pick up on some of the things that Mark brought out there in terms of the economic macro picture. We've had very low interest rates. There's a sense of inflation maybe and bond yields slightly ticking up. What's your sense of that, and how much impact do you think that will have more broadly on the market? How do you see that playing out?
Actually, I'm fully with what Mark just stated. I think the cushion you still have between the more or less risk-free rate, 10-year government bonds in each country, and the yields in the country, I think is still on a more or less all-time high, or still close to the all-time high. It will change because interest will rise over the next couple of months, years, yes. But I think at the moment still investors will put a hell lot of money into the real estate sector. What certainly will at least slow down or will probably stop is the yield compression. I mean, we thought it on one of the slides of Mark, I think in 6 countries or in 6 property assets classes, you know, we still saw some yield compressions. In Poland, we didn't see any yield compression over the last couple of months. Maybe this will change when buildings like, for example, the Spire will come onto the market. Maybe this will set a new benchmark as the 4.85 in Prague. I mean, this was one building, which was the Penta building, the Florentino building. I think rents will not increase that much. We will have the inflation, but at least, for example, in Warsaw, in the office market, I don't see any higher rents simply due to the supply, which will come to the market.
Okay, good. And Paweł, in terms of some of the macro risks, political risk, we've had a year basically of political instability in some ways, and we were definitely here assuring you, or certainly the panel was assuring you, and Tim from the UK was assuring you that Brexit would not happen, but actually it did. And Trump, there was a lot of assurances in the risk ones that we did from Americans that Trump would not happen. But he did. There's a lot of insurances at the moment from the French saying that Le Pen will not. And I'll be interested to get your view also, Martin, on Merkel and what may happen there. But we've also got the Dutch government, and the Dutch are saying that nothing will happen there. How do you see that? I know you won your bet on both Trump and Brexit. So can you tell everybody here what you've been doing in the betting shop?
Okay, about foreign countries, I will not speak, but I think it could be interesting to make a bet at the end. I mean, I'll get everybody's opinion, what's going on to happen on those 3 issues. Yeah? You talked about Christmas. I think this government promised that there will be Christmas all over during the entire year to everybody. So maybe that's the spirit a bit. But despite everybody's concern and worries last year, you can see that in terms of the deficit for 2016 in Poland, it will be the lowest ever. It will be actually lower than everybody was predicting even a month ago. There are various reasons for that. It's not only the economy, but it's also the fact that there is a surplus at local governments, and it's more than 20 billion of the surplus zlotys at local governments, because when you look at the deficit, you combine both the central government budget and the local government budgets. So you have 20 billion plus surplus at the local authorities. You have influence of LTE sale, so the revenue came from that as well. You had huge profit at the National Bank of Poland that supported the state revenue. You had increased collections from VAT. That's another story that we can discuss in a second. And I wouldn't call them collections. I think they should make some provisions for those, at least part of them. But overall, you can see that the budget is in a pretty good shape for 2016. I'm not worried about 2016 is gone. I'm more worried about 2017, whether this budget actually can hold the water. And I think there are two issues that I would be concerned about. One is, of course, contribution to families for children, second and subsequent, and this will be the first full year of payment. This is point number one, but I think the bigger problem is the early retirement. The retirement age was reduced to 65. We have actually problem with finding workforce. At the same time, we cut our workforce by sending people to the retirement at 65, and guess what? The first pensioners will exercise that option, I think, September, October this year. So you have a double whammy. They stop paying to the contributing to the social security system, and they start collecting. I think this will be much more interesting to watch, the macroeconomics in Poland from that perspective for 2017. But for 2016, hats off, the lowest deficit, the lowest unemployment. I think there is a lot of confidence in the market. The last quarter of last year, because of the VAT turmoil, there was a lot of nervousness, and we saw some transactions that got suspended, or actually they were killed. They are not going to happen. But again, I think the market forces usually prevail, and I think every lawyer in this room knows how we are going to go about it, even if there is no clear response from the government how they want to tax it. I think everybody knows how to structure transactions for 2017, and we see to my surprise, I'm always actually the guy who sees glass half empty. Everybody knows that. I'm pessimistic by nature, otherwise I wouldn't be a lawyer. But I have to say that usually January and February are the quieter months. This year, January, the number of instructions was like this. And that's some of the deals that got suspended last year, but there's new money coming. We got more clients and new clients from Asia, from Middle East. So these are the guys I've never seen before. So overall, I would be optimistic, if I may say so.
Can I ask why the local government surplus? It's a pretty huge surplus.
The reason is that they didn't invest enough money. The surplus will go down because they didn't start their structural investment, so they hold some money in their pockets. So this surplus is going down. So what happened with the budget last year, it's very easy to present as small deficit, but actually if you look at the numbers, of course, it would be different if the local government would invest in what they were supposed to invest, local infrastructure including.
Do they still have that money available?
Yeah, they will start investing, so the surplus will go down next year.
In infrastructure?
Yes. So the surplus will go down. That's why I'm saying 2017 will be much interesting budget.
Okay, good. You mentioned there that there had been a break on investments, but that seemed to be picking up, or you were expecting one, but actually that was picking up, and that you'd got new investors coming in. Piotr, what are you seeing at the moment? Are you seeing different types of investors, Asian investments coming in? I mean, interestingly, I was in Shanghai. We were in Shanghai along with Adrian and Paweł talking to Chinese investors, and it would be interesting to see if we're beginning to get more of those Asian investors beginning to look particularly at the Polish and CEE markets more broadly.
Yeah, I think the market in general is gaining a lot of maturity. I think we see a bit of a change of guard. Previously, particularly the core transactions were driven by say homogenic set of buyers. Now I think the pool of investors is much wider. We see a lot of capital coming not only from South Africa, because I think it's close to 2 billion last year, out of the entire volume of 4.7, which, by the way, was a record year post-Lehman. But we also see new capital, as you mentioned, coming from Asia. I think that the next destination will most probably be Canada, because I see that they're lining up the capital to really hit strong in the CEE, because the market is getting more and more diverse. I think it's getting deeper, and I definitely expect that the investor pool will be more diverse. I think. I think that the question is whether the investors that come in, they'll be ready to pay the premium for the entrance to the market, and whether they'll be able to replace the core buyers that have been present in Poland, have been the market makers for years, and now are having second thoughts and perhaps trying to restructure the portfolios and being a bit more selective. And but at the same time, I think that this will be balanced out by the amount of new product that's being put onto the market, because in general, whatever core product is placed in Poland on the market, this gets a lot of traction in the investment marketplace. So I think this is good, which means that the market can grow in a linear fashion, and there will not be a drastic oversupply of new products. So I think all the pointers are there. I think what Paweł mentioned is the political macro context. I think it can be a bit fragile. So I think whereas we might be on a good path, I think we need to really steer carefully in order not to fall out, because I think the infrastructural investment should kick in again. But at the same time, I think the course of the government should be measured in such a way that the capital actually is extracted. But I think I would agree that all in all, it bodes well for 2017. I think that the volumes that we've seen last year were actually quite amazing, with 2 billion euros closed in the last quarter. And I would expect a really good performance this year. But I think it's a bit early to judge on the volume. But I agree with Paweł. It's only midway through January, and we really see new deals being signed, new LOIs being negotiated, projects come into due diligence, as if nothing which we saw in Poland, for instance, over the festive period or just before Christmas, ever happened. So I think the spirit is business as usual for now.
Okay, good. And Adrian, obviously Skanska Group active across Europe, and CEE a specific part of that. How does the group see the CEE region in that context, in terms of the projects that they've got elsewhere? Is that something that they're continuing to drive forward? What's the sense of how Skanska looks at this area?
So maybe just to give you a picture, the overall picture. Skanska Commercial Development Europe is just one of the 3 units. So we have Skanska Commercial Development Nordics, which consists of 4 countries, and we have the same unit in the United States. So out of these 3 business units, Skanska Commercial Development Europe, which consists of these 4 countries, I have told you, Czech Republic, Romania, Hungary, and Poland, takes really a big share of the overall business. So to give you a few numbers, for example, in terms of the sales, last year we have done 25% of the overall volume of divestments from the Skanska Commercial Development portfolio of office buildings. The previous year, in 2015, was much bigger share, because it was almost half of the overall volume. This year will be again more weight on our side, on the CDE side. In terms of leasing, so renting the space, I can say that in 2015 we have leased 120,000 square meters GLA of office space in these 4 countries, which was more or less 40% of the overall volume of the space leased by Skanska in these 3 regions. And now this year, which I cannot publish yet because we are a public company, so I cannot say exactly what are the numbers, but definitely we will improve the results 2015 so comparing 2016 to 2015. And on top of that, the share of the lease space from the overall business will be dedicated to CDE will be around 60%.
Okay, good. Carlos, I just wanted to pick up with you the risk elements that we were talking about before in terms of political risk. Obviously, that's a large part that the World Bank has to come into contact with wherever it is in the world. How are you seeing that, particularly in terms of, I guess, this region, but also Europe more broadly? Do you see the political risks as higher than in previous times? And I mean, I don't expect you to give a dramatic quote about Trump, but I mean, how are you looking at those kinds of risks at the moment?
We had just last Monday we had a conference on our flagship report on global economic prospects, and one of the things we mentioned, or the team mentioned, the three related, whether you're going to call it risks or not political, but policy. risk, and we were trying to assess, right? Because it's really hard. It's easy to say these are the risks, but it's very hard to measure the risk, right? The uncertainty, it's a different issue from a point of view of making a projection. So there are three things that the team was mentioning. One is obviously the fiscal policy stance that the new Trump administration will take. There is almost consensus that there will be expansionary fiscal policy in the U.S., a combination of more expenditures and lower taxation. So that's one thing. How, what size, what is the impact that will have when the U.S. economy is already a very low unemployment? It's something that Mark, I think, alluded to in terms of the inflation risks and increase. Combined with tightening of monetary policy in the U.S. could bring actually higher real interest rates. The other is the trade aspect, right? There is a lot of rhetoric about whether there will be a trade war, and who knows whether at the end of the day, Mr. Trump is a businessman. Is he just blowing smoke, or really intend to use that as a policy lever? It's very unclear, and how do you measure that? But that would have implications for the spillovers of the fiscal policy as well. Will they stay in the US? Will they spill over to Europe? Who knows at the end of the day. The third one that I think people don't talk much about, but they're beginning to talk now, is the sanctions on Russia. If he takes a positive stance in eliminating or reducing the sanctions on Russia, then it has an impact on the Russian economy, and it also has spillovers for the rest of Europe. So I think these are the three things that, as we go into the actual Trump administration, we will all need to assess better. The direction it's clear, but the magnitude of the impact and the spillovers into the other economies, then we will need to revisit that and measure it more properly.
Yep.
Just Carlos, we have seen that on the previous presentation of Mark's, it was for me kind of astonishing to see that the inflation in Europe, in EU, can go up to 2.6%, yes? I can understand the inflation can go up in US because of the GDP growth, and having such a weak growth in Europe, how could it be possible that the inflation can go up? And what will be the factors in increasing this inflation?
In the US or in Europe?
In Europe.
In Europe.
No.
I think, we, frankly, what we see, we haven't, I think because of the tightening, you see the wage, so the tightening of labor markets, right? That's the thing that people should look at in terms of inflation forecasting, in my mind. And that's what Mark was doing. And I think what it will be difficult for us to truly measure at the end is whether, if the US closes up its economy, then all this modeling that we usually do, they're just worthless. Okay. Right? Because then nobody can tell you exactly what's going to happen. What is the U.S. continues to be the big elephant in the room in terms of the size of the economy. So what they do, not only in terms of fiscal policy, what they do in terms of trade, and you have seen already an appreciation of the dollar, right? So that has an impact as well. So whether these things will be reversed or not, whether there will be spillover effects or not, it's very difficult, frankly, to, and I know I'm not answering your question, but it's very difficult as an economist to try to model as if nothing has changed, because things are changing and the structures are changing. So.
Yeah, and I think, Adrian, at least in Germany, the inflation growth we had last year was mainly due to December, which was which was due to the oil price and the dollar. This was really just 1 month, which was December, and this impacted more or less the whole inflation rate in Germany and most likely all the other countries. So I think we do not see really that inflation unless oil prices are increasing more and dollar is probably getting stronger and stronger.
I wanted to pick up a little bit about the fundamentals. I'm going to come back to the tax issue, the VAT issue especially, because I know that's something that is of interest to at least some people here. And investors elsewhere, obviously. But in terms of the market fundamentals, you're lending on a number of buildings here. You mentioned that already. There's a significant amount of pipeline developments still, new buildings being built. You can see Warsaw being transformed. When you're looking at that and seeing, do you think that the fundamentals back that up in terms of that here we are, we've got these, we're adding to the opportunities, or do you think that's going to mean then that a number of B offices, or what will become B offices, will then be empty and unsellable? What's your sense of how the fundamentals in the market are moving?
Yeah, I think it's going in both directions. On the one hand side, the fundamentals are pretty good. You have a strong GDP growth. Poland has shown a strong GDP growth over the last, 10 years. Poland came through the crisis still with a GDP growth, which was the only country in Europe. So I think fundamentals are still very strong. Are the fundamentals strong enough, firstly, to survive such kind of at the moment, strange government, how I would call it? That's the first question. And are the fundamentals really strong enough to support all the new supply on office buildings now coming onto the market? Regarding the government, I mean, I'm German, so I'm not allowed to have any kind of opinion on that here. I'm pretty careful here, because at least I think more than 50% of the people in here should have voted for them, for the PIS. The first point, just statistically, of course, yeah. That's the first point. The second point, coming to the supply, I'm fully with you. We will see a lot of new supply backed by the fundamentals, GDP growth. But on the other hand side, I don't expect that many new entries into the market regarding the tenants, which will soak up all the new office buildings. So it means at the end there will be a cannibalization process. Yeah, between the different buildings. And of course, I mean, we see it already that a region like Mokotów is already starting to suffer on the office sector here. Wola at the moment is booming due to the new metro. And I think, but this is probably not simply due to the fundamentals. I think this is what happens in every city. Here we will have a constant change. A metro line is always changing the whole situation. So I think the strong fundamentals in Poland will survive the high supply and will survive this government.
Okay, Piotr, you wanted to pick that up.
Yeah, I think it's a good point, but at the same time I think that fundamentals are strong, but at the same time I think that the market is still growing. I mean, we're nowhere near in terms of liquidity to our Western European counterparts. That's why I think it's a pretty thin line between a market that's functioning and a market that can basically fall off the cliff because the fundamentals are distorted by actions from within. I would say that in terms of or net absorption, it's actually pretty positive. We've tracked the net absorption over the last 5 years, and the long-term average is something like 160,000 square meters for Warsaw. Over the last 2 years, we've seen 290 in 2015 and roughly 250 in 2016. So I think it shows that the net demand actually is above long-term averages, but at the same time, the amount of stock that's being put, the new stock is being put onto the market, means that it'll just take a bit longer to absorb. But at the same time, I think that there will be a lot of weighing towards the new stock. I think the market will polarize and the new assets will continue to perform. The older assets will really have to reinvent themselves and really take a bit of pain. And we're seeing that, I think, in Mokotów, but also in other districts in Warsaw. But at the same time, I think that the tenants are already showing that the demand is there. I think we're seeing new occupiers in Poland that we haven't seen previously. We're seeing really impressive expansions and new businesses that haven't been here before. It's just that the market will have to take a while to adjust, because clearly the new supply with potentially 500,000 and more over the next 18 months in Warsaw alone will mean that there will be a period of transition.
Okay, good.
Yeah, but on the other hand side, I mean, this your understanding is that there will be end of the supply pipeline, because if the pipeline continues like this, even if we have a high net absorption, but even if you're building more square meters than you have net absorption, still something is wrong in the market. Yeah, if you have each year coming 5 new towers onto the market, it will never happen.
You have to stop lending.
Yeah, that's it.
We don't do construction lending. No.
That is true, but at the same time, I think the market is more prudent. We've had a wave of supply a few years ago when the vacancy rate shot up, but I think it's just a period of transition. I mean, this will not go developing new towers indefinitely. There has to be a tipping point when the market will even itself out. But I totally agree that as long as we keep delivering new stock to the market, then the vacancy will grow.
as long as you have the strong fundamentals, no one will stop developing. That's the point. So I mean, what will be the changing point? Will it be a crisis coming from outside of Warsaw? Here, maybe coming from Brexit, coming from the US? Because there has to be a changing point or a turning point here. Otherwise, as long as you have strong fundamentals, developers will still feel we're in the right position, we have a good country, we will continue to develop. And I mean, we still see the impact on that, because look at the premium rents, at the top rents we have at the moment here in Warsaw. I mean, you have rents 20, 22 euros net effective, max, I would say. I mean, I don't believe a developer at the moment saying he gets 28 euros, because I mean, that's probably the rent which is in the lease agreement, but certainly not a net rent here. And if you compare that to other European countries here, I mean, in Frankfurt, I mean, it's almost double as it here. So, I mean, you don't see any kind of rental growth over the next couple of years. And so I think
the rent in
Frankfurt, in Frankfurt, I think top rent is around 35, something like that. Definitely above 30. Yeah, so 50% higher. And I think, I mean, we have seen such kind of high rents in Warsaw as well. And I think a top rent in Warsaw of 22 euros is not justified for such kind of capital.
So no, I just wanted to add one thing, because as usual, you have to look at the specific of the certain market. Yes. So when you look at Warsaw, definitely today Mokotów is suffering. Yes, Jerozolimskie cluster is suffering, and this is mostly because of the infrastructure. Yes, and all of these new companies which are entering Warsaw, like Credit Suisse, like Goldman Sachs, they want to be in the CBD. Why? Because you cannot attract any employees. Yes, as you have seen, there is a very competitive situation on wages. So today, to attract any new Gen Y, Z, whatever employees, you have to offer really not only the wage, the salary, but you have to offer all of the amenities. Yes. So they want to have a nice office, but then after 5 p.m. they want to go to have some fun. Yes. So that's why they want to be in the action. Where's the action? Yes.
Working for a box
No, I mean once again, this is this rents which actually, as you know, fallen from 30 euros, 32 euros to 22. This is also a reason for attracting business service sector to the CBD. Yes, which is really like something which has never happened. So that's why I agree. The Goldman Sachs guys maybe, but if you look at the employees who are actually employed for the reason to basically run this back office functions, yes, this is actually the reason. So I think because of the low rents, this will be very attractive market for all of the different investors. I don't want to touch Brexit and the influence. What will happen if these companies really move to Frankfurt, and maybe as a side effect to Warsaw. So
yeah, but on the other hand side, so you should offer 15 euros in your new buildings, and you get all the people from Krakow, from Łódź, and from all the other regional markets. You get all of them back into Warsaw then. So I mean, the logic would be the lower the rent, the better it is for the country.
Yes,
but maybe not for the landlords, and not for the developers, and not for the rest, and especially not for the whole, let's say, sector.
Still, the rent is what, maybe 10%, 15% of the cost of running the operation, and the biggest part of it is the cost of the salary.
Interesting, you mentioned that we don't want to pick up on Brexit, so I'm going to ask. I'm going to ask Paweł to do that.
Brexit means Brexit. Yeah. I don't know still what it means. But
yeah.
Okay.
What's your sense of that? There've been a couple of the banks came out yesterday to say they would move 1,000 people each out of the market, out of the London market. You're obviously looking at continental Europe in general. Is there a sense from your firm, particularly, that you might be looking at moving some things away from there?
We did.
You've done that already?
We did. Our entire shared services, we moved them into Warsaw. And it wasn't me, really. I wasn't involved, so no my influence at all. It was actually a decision between London and Paris to move everything to Warsaw. Cost base. I would say it's a mixture of the employment cost, rental costs, and the availability of employees and the wages, and the quality of employees. Because I think Poland when we talk about there was one of the slides said that the risk is that the wages are going up, which is true, that it's a risk to the BPO sector. It is true. On the other hand, I think it is true if you look at the, I would say, lowest quality of the BPO sector. If you go to more complicated or more complex services, I still think we would be competitive. And I think Poland stopped being the cheapest source of the BPO services. It becomes the source also of more complex services. And if we look at what our clients say, we can see a movement of not that many headquarters so far. I would say I know a few that they will move their headquarters out of London. Actually, the number one location that is mentioned is actually Amsterdam for various reasons. And then, when we talk about the mid-level BPO services, they actually look for definitely cheaper locations, and I think we can definitely benefit from that. And I think there will be some movement. We are doing a couple of transactions and leasing work at the seaside, and this is happening. I mean, okay, what will be the size? We don't know, but actually. Going back to what Martin was saying, there's also another side effect of this whole price war, and we can see that when we talk to the investors, to the clients. I would say the concern investors starts having is what rents actually am I underwriting? Because you have the headline, and 2 years ago you'd say, okay, here's my headline, my net effective is 85%, 80%, let's say. So 20% discount, more or less. Now, especially if you look at the logistics sectors, and no offense to anybody who is involved in logistics, nobody knows. And I think it's like we had a large transaction that didn't happen, and that was one of the main reasons. It wasn't a VAT cluster blip of the Polish government. It was actually the issue, what rents do we underwrite? And I think we can hear that from the investors saying we don't know what is the actually effective rent. So people are much more cautious, definitely, than they were before.
And is that, just for clarity from my point of view, is that in Poland specifically, or is
Poland specifically.
And is that the same in the rest of the CEE region?
No,
or not?
Definitely not. Definitely not. I think Hungary is everybody's darling. We've done several transactions in Hungary. I think we've done 75% of what was done in Hungary last year. And you can see that there is a strong belief that rents hit rock bottom. It can be only better from here. You can see the yield compression happening in Hungary as we speak. There is a demand. It's going to definitely take over this year. This will be everybody's darling as well. The market is still small and there's not much of a supply, but there will be a growing market for sure.
Good. Piotr, I'd like to just pick up on some of the other, because we've talked about e-commerce as well. Interesting that in the UK, actually, the performance of retail, and especially high street retail, actually has been very positive, because where you've got tourism and you've got retail together because of the lower pound, actually that's created a very positive story there. So there are small pockets of positive areas. What's your sense here in terms of those sectors? Let's look a little bit at logistics and retail. How are you seeing that?
Well, they are still going strong, and the last year's results showed that there is substantial tenant demand. At the same time, there is traction in the investment marketplace, because out of the volume for last year, close to 2 billion is actually in retail deals, and they are being underwritten from many destinations, which shows that fundamentally, as Martin mentioned, that the fundamentals are there, and the investors are willing to take a bet and invest in those. But I'd like to touch on what Paweł said. I think the key point or the key message is in fact predictability, because this is, I think, what we've been missing, and I think every investor that we've spoken to over the last 6 months points to that changes in law can happen, but they have to be thought through. They've got to be transparent. There's got to be a degree of predictability so that everyone can measure and decide upon making their own investment. I think this is the key ingredient that we're missing, and it's probably one of the most important ones for the next 12 months. There's got to be predictability, and the investors have to feel comfortable that they are entering with their eyes wide open and they understand the overall context.
Okay, good. And Carlos, that's obviously one of those areas that I'm guessing the World Bank particularly looks at is how do you manage that need for investors to have that predictability with sometimes governments that don't necessarily take that on board or are maybe heading in a different direction. Is that something that you then try to guide them on, or how does that work?
I like the fact about the statement about predictability, and because I had a professor who used to say that risk, the difference between risk and uncertainty is that you can measure one and not the other. I'll let you know which one. I don't know. We, as you may know, we have this ease of doing business report where we make an assessment how easy it is to do a number of certain activities that are related to establishing a company and then running a company and all that. And clearly, this is always something that comes up, which is, I don't care, what is your regime or your philosophy behind your economic regime. I just need to know what it is. And it's a very difficult discussion always with client countries, because this is something that it's very difficult to explain, if you can believe it. That we are not in the business of supporting a particular company or a particular sector. We are in the business of supporting the whole business environment, and that requires predictability. And it's never an easy discussion. It's never an easy conversation. And some countries are obviously more conducive or more supportive of making the changes that are necessary to support that business environment and the investment climate development.
Okay, good. Did you want to pick something up?
I just wanted to say that, when we talk about the predictability, I think we all forget that the general climate in Europe and the US is also related to taxation. And many governments will be taxing. They will be taxing now maybe wealth, maybe they will not tax labor, but maybe they will tax capital, but there will be taxation coming. And of course, for example, the good example of what happened in Poland was suddenly taxing funds, those closed-end and open-ended funds called FIZ, yeah? Everybody knows what they were used for, and it affected our industry, hugely. And however, again, it's always the arms race. So us and tax advisors made money by restructuring within last days of last year all those structures, and I don't think anybody will be affected. Well, we are cleverest into the government. I don't know how long, but still. But anyway, this happened, and everybody was up in arms. But I don't know how many people here know that Luxembourg changed their tax laws on 28th of December, coming into force 1st of January. 3 days. And we are talking about a serious tax change that will affect all your businesses if you go through Luxembourg with the loans or equity. And, it's like nobody said about it, anything. But that's happened, 28th of December, 3 days vacatio legis, coming into force on January 1st. So, you see, it's a trend of catching people with their hands in the jar. It's a trend. It's not only Poland, it's across Europe.
And it's interesting, actually, that one of the things that Theresa May said at the Conservative Party conference in the UK was that because of the situation with pumping money into the system, that those with assets had got wealthier and those without had got poorer, and that therefore there needed to be a rebalancing, and that will be done through taxation. So I think this is something that is going to be coming up quite a lot. I'd like to open it to the floor if anybody's got any particular questions or any thoughts that they want to give. Has anybody got any views, any questions that they want to ask the panel?
Just following Paweł's thoughts on underwriting the leases. I have a question to the panel because I was on another panel, another session, and one of the speakers, I was really surprised, said, everybody's saying about the headline rent and our effective rent, but nobody's speaking about the real effective rent. Do you know what it is?
My guess would be that's the rent, which is headline, minus the incentives minus the incentives you don't know.
Made it on a new wave of investors, Asian and Middle Eastern. Any particular drivers behind that, other than the Polish market being attractive?
I think it's the diversity, it's the scale of the market that keeps growing. We've seen that the volume of the CEE region is probably around 8 billion. Interestingly enough, Poland's share is growing, and I think those investors look for diversity for sure. So they'd rather not go for single assets, but rather buy something that's spread around. At the same time, I think it's one of those markets that gives you an opportunity to capture more scale, because I think the expectation is, as Mark pointed out in the presentation, that our share in the pie is actually growing, and probably given the fundamentals, this is the expectation that the market will emerge.
Yeah, but on the other hand side, the question should be allowed. Why did I think it was a Singaporean fund bought the Florentino in Prague for such kind of record deal, and why none of the Asian funds now bought such kind of a property here in Warsaw on a new record-breaking yield as well? Maybe it will happen with the Spire. You know, I'm not involved in that deal. But on the other hand side, you know, the question should go to the Asians. You know, was it the instability they were fearing here in Poland and the stability they were offered in Prague? It's just a question. I've no idea.
The Malaysian funds supported back basically the acquisition of the H. Brevis, yes, building. No, so Malaysian fund, yes, they have actually backed the service investment management in the acquisition.
But it's Malaysia or Singaporean money.
That's correct. That's correct. So they're the back investor behind that, and the investors via money managers were actually placing bids on other office properties in Warsaw, and they were unsuccessful. So I think it's just around the corner. I think the Canadians have also come to the Czech Republic. They've bought there, and they'll probably follow suit in Poland. And I think it's a matter of time. It will probably happen this year.
But also, what is important, Piotr, besides the diversity, is of course pricing. Yes. So when I have just been in Frankfurt, Munich, and Hamburg, and I have had few meetings with investors, and what they say, they actually ruled out France, ruled out Italy. They, of course, you know, London has its difficulties. So now, because of the yields going dramatically low in Paris, in Milan, of course they will try to look for properties in Germany, but they have to look at Poland. And again, they can go to Prague, but you can just go buy some single assets. And in Poland, you have this coverage. You can go to Warsaw, and at the same time, you can buy properties in Krakow, Wrocław, Poznań, Katowice, Gdańsk. Yeah? So you can really create a certain mass, critical mass, that these big investors like Asian funds can go into.
Yeah, on the one hand side, but I mean, how many really big investments such kind of fund can do in Krakow or in regional cities, in the office sector?
I'm talking about the platforms, yes?
Okay, good. On the other hand side, I think we should ask something also here in Poland, and there is this kind of REIT structure which is coming up. And I think this is very important, because we're always just talking about international investors. Yeah, and I see two ladies nodding over there saying, yes, you're right. Because, you know, in Germany, we have the open-ended funds buying also in Germany. We have closed-end funds. We have different kind of structures buying in the local country. And I think in Germany, I'm not sure, 40-50% is local money, buying local product. Yeah? And when I look into Sweden, for example, into Nordics, I think over there you have 70-80% of local money. The rest is international money. Here in Poland, I mean, Mark, correct me, I would say 98% last year were international money. And I think this is a big threat to the market, because we've seen some more difficult decisions from the government, from the local government here, you know, and investors will turn back into Spain, will rather pay 3% on buildings in Germany or somewhere else here, and immediately the whole market, I would not like to use the word collapse, but will certainly face a serious issue. Yeah, because you know, buying is one thing, but most of the investors also like to exit somehow. And if the exit will get more and more difficult here, question mark.
But the stick has two ends, Martin, because, you know, when I compare Poland to Czech Republic, so, you know, this is this 5% share of the capital, of the local capital in Poland. When you look at Czech Republic, especially on the office investment side, yes, it will be 50-60%. Hungary, 50-60%. Local, you know, foreigns or local Czech crowns, yes? So from one end, it's a great thing, because Union, Deka, all of the German funds can sell, but on the other hand, in Prague, they're really overbid by the locals. It's a huge competition. And you see this also in Sweden, yes? Any German fund has a huge difficulty to get into Swedish market and buy properties from Skanska.
Yeah, but Yeah, but on the other hand, why is it? Because, you know, the locals understand their market better, have a better judgment on their own market, and that's probably the reason why they are willing to pay probably slightly higher prices here, because also this union and decars, they also have to, let's say, see where to allocate the money, and they also benchmark the countries as well as the transactions internally here, and that might also be the reason why they say, okay, Sweden is too expensive for us. But nevertheless, Sweden is a well-performing country. And if not mistaken, last year, I think in the Nordics, 43 billion of commercial real estate volume went into the Nordic countries. 43 billion, that's 10 times more than Poland here. And I mean, this cannot only be done by international money, but also by local money. And I think this is something we really need here in Poland. We need a very good basis here. This is...
So where, I mean, there is plainly Polish capital, so where's that going at the moment? And is the REIT structure going to enable more local money to come into the market? What's the, yes, sorry.
I am Małgorzata Kosińska, and I am actually president of the REIT Association in Poland, which is a very small organization, but thank you Martin that you remember me, collect people from the real estate industry, mostly experts. And at this moment, what we did, we had been registered in the proper moment, because we are registered as well as an organization, as a consultant of the real estate industry, only one from us to the government according to the new law, new legislation. What I can say, I strongly believe that it will be implemented. Maybe I am, you know, positive person, I always, during my life, but I believe that it will be implemented maybe in the second part of this year, or third quarter to be conservative. At this moment, sorry?
Go ahead, I will comment when you finish.
No, you think that it will be or not? Because
it will be.
But the point is in which shape? Because at this moment, what is the status? The status is that the new law was put into the public. Then it was the first stage of consultancy. Then in a big rush on the 5th of January, it was a conference between consultant and the government part, just one day, very general discussion about those comments. What is positive that the people from the government side said that the number of comments were so huge and so fundamental that they have to, let me say, review the agreement, the law, and the new shape will be different. We can say that the government part, they didn't say, yes, we approve comments from our association, but they said that the 80% of the comments were positive. It means that makes sense from the business point of view and the procedure point of view. And they will take this into the consideration. There are some points which we try to discuss because we as well had time to send some additional comments. We are waiting for the next form of this law and the next discussion. The point is, in my opinion, not when, but in which shape. And we believe that the new law should include the general rules which REIT should have. It should be real good law which prefer the Polish capital, partly diversify capital and the best properties.
I believe it will come into force. I wonder if anybody thought that people will be buying in Polish zlotys into a foreign exchange, into foreign market, in a sense, like foreign currency, because the rents are in euros, and they will be buying in zlotys. And I wonder if anybody.
I said you our concern, and I said that we did a lot of comments. You can review the comments.
Well, I would be more
page.
than happy. No, I'm more than happy. But my only concern is, because I agree it is needed, but Czech Republic had the REIT law for years. How many REITs are in Czech Republic? Zero, nothing, nada. And I think what will happen is, because I agree with you, it should be implemented, and I think it is needed, but my fear is that what will happen is that it will be a vehicle that will be used by institutional investors, and with a very small free float, maybe to the public, maybe, if. But it will be it. It will not actually, it will not activate Polish capital to go into real estate. I still believe that.
Okay, I can only add that what you said, it were a major comments which we did as a people, as a specialist. It means that even if we do not expect that, you know, the first REIT will be sold to many people, we believe that it should be, we think that it should be some period of time of the floating and the concentration clauses.
But Paweł, to say something very intelligent, each journey starts with the first step. Yeah, and that's a good point. And even the German open-ended funds, I mean, today they have, I don't know, 3, 4, 5, 6 billions under management in one fund. I mean, we didn't collect that in Germany also over the last 5 years. Yeah, I think they were implemented in the 50s or in the 60s, the first funds. But at least, you know, you should do something, because otherwise the whole country more or less is owned by international ones. Yeah.
There's huge anticipation for REITs in Poland, and it's interesting to hear you say that in Czech Republic there's nothing. But why is that? What's the fundamental reason?
But you know, can I, Paweł? No, I'm not. I cannot compare my knowledge, Paweł, to yours. But what I see on the market, just like 3 years ago, when we were selling projects in Prague, I could attract local buyers up to 20 million euro. Yes. Today they go 100, 150. But how they do it? They do it in club deals. Yes.
Club deals, exactly.
And second thing,
club deals, but they don't use the REIT structure.
Yes, I agree. That's why maybe this is, in some ways not as efficient. But there is also a second vehicle, yes, which is run by the Erbe fund, yes. So in this way, because of their branches that they have,
it's like an open-ended fund.
Exactly, exactly. So that's why maybe because of this, they don't simply need a REIT.
And
yes,
they are now pitching for Polish properties.
You know, all those, if you look at those funds that actually are now very active, and they came into Poland as well to buy Polish properties, if you look at the people standing behind it, it's like one is Česká spořitelna. This is like that. Actually, it's equivalent of a German open-ended fund, more or less, in terms of the collection of money. They found simply different vehicles to do it with the people who understand real estate, and I think that was the reason. Because somehow nobody uses the vehicle that theoretically is tax exempt. So I
have individuals, yes, now through Česká spořitelnia, through the local.
Then they are smaller. I mean, normal people, not the rich ones.
And on top of that, I can tell you that also Hungary, yes, is going the same path. They have. We just transacted with Erbe in Budapest. They bought from us a building which is worth almost 70 million euro. And this is exactly coming from the pockets of local Mr. X and Y and Z, not living in Budapest, but also living in the local villages, wherever Erbe has its branch and can sell the certificates to. And what was very interesting for me, they asked me, the principals from Erbe, they asked me, like, guess, what is the percentage of, what is the share of the real estate allocation within our funds? From the local community, yes, when you have bonds, stocks, etc. I said, I don't know, 10%, 20%. They said 95%.
Okay, good. Now, sadly, we're almost at the end of our time, so I've got 2 questions which are for all of you. The first of one, which is, we've talked a lot about where the opportunities might be, where the risks are, where you might invest, where you might go to the bookmaker and put on a bet. What are your bets in terms of investment? Where do you think, where would you be investing money if you were given a large sum? Where would you invest it? Let's start with you, Paweł.
Okay, if I'm given really a lot of money, I probably would still go for a trophy retail.
Trophy retail?
Trophy retail, or trophy office.
Okay.
But trophy, I would just go and do the safe play. Buy the asset that always will lease. Okay, good. Piotr?
I think that given the way the market has been developing, I think it's such a dynamic environment that there's plenty of opportunity, and actually we see a lot of money that's, with a value add to opportunistic profile coming to Poland, but I think it's quite difficult to measure the outcome. So I think if you want to save a bet, I would say office with office or retail with an emphasis on a core CBD office with a long cash flow in place. I think you cannot go wrong. Whereas obviously you can get the benefit in say secondary assets, but it's much more tricky and more difficult to foresee.
Actually, if I can go outside of Poland, I would do Hungary, office or retail.
You can go wherever you like. Yeah.
Then I would go Hungary, office or retail.
Okay.
And I would do Romanian office in Bucharest.
Okay. Oh, okay. Good. Martin.
The question is it my money or is it investors' money?
Well,
if it's my money, I would buy a golf estate next to a vineyard with a nice finca somewhere in Cape Town.
Okay, all right, no, that's good. And if it wasn't your money?
Okay, it's more difficult. I would then rather also go definitely into trophy buildings, but I would definitely prefer, let's say, a little bit of Poland, but I would go on the safe bet, and I would go as a German into my own country, because I see the next crisis coming, maybe not 2017, maybe but 2018. And one thing we learned is that with Germans, we're always pessimistic, but at the end, we are more or less performing quite well. And so I think you will have, how should I say, maybe not the highest profit, but I would say the less deficit at the end when you buy in Germany.
Okay, and just one quick thing is that I forgot to ask you, which I meant to, which is you don't at the moment lend in Hungary.
No, we don't.
Lots of activity there. Is that going to change or not?
No, it's not going to change because, I mean, you have a stable government over there and a predictable government, but unfortunately still a very difficult government, and that's not the reason why why our bank is interested in lending in Hungary. And frankly spoken, I personally hope, because I like really Poland, I like lending in Poland, and I really hope that the Hungarian government is not, let's say, the blueprint for the Polish government in the future. Okay, good. Adrian, where would you invest?
I will join Piotr. So we have double the money and quite actually a good amount. And I will go to Bucharest. Why? Because it's the same situation what has happened in Budapest. In 2013, we have sold really one of the most prime buildings for around 8%, and now we're selling for 6.5. So when you have seen the presentation of Mark, yes, the yield in Bucharest was at the level of 7.5. When you compare it to Budapest, it's 6.25. So this is where Piotr, we already agreed to go together and spend this money.
Okay, good.
If you want to join, of course.
For you, Carlos, you're not allowed to invest, I know. So what I'm going to ask you, and then this will be the final round to everybody, which is, what are your, given that you've just started here in Poland, give me what your biggest sort of personal aim and your biggest, I suppose, World Bank aim is in terms of 2017. Quite high stakes here, Carlos.
Very high stakes. For us, we were talking, I think, before the panel. It's a bit of a challenge in the sense that at the end of the day, the World Bank is a development institution. And Poland, it's already a very high-performing, high-income country for us. So it's both an institutional and a personal challenge to continue to engage with this government in a way that is constructive, supportive of private sector development as well, but also while realizing that our scope for influencing policies is limited. So it is, again, a personal challenge, but also an institutional one.
Okay, good. Adrian, your aims for 2017?
Business.
More business.
No,
or business or personal?
Business, because definitely from personal side, I want to spend more time with my children. So that's that's the most important thing in this crazy, as you said, January is like I haven't had yet such a January over the last couple of years, and on top of that, I will have to probably take them sometimes on my trips because there will be many. And business-wise, it will be a divestment of one of our office buildings in London, which I will take part of the coordination role.
Okay, great. Martin?
Fulfilling the budget, the annual budget, end of March, and rest of the year improving my golf handicap.
Excellent. Piotr?
I think it's for me, it's a focus on new capital. At the end of the day, I think it'd be great to make the Polish market more diverse, deeper, so that it really catches up to the Western counterparts. And at the end of the day, it really is to the benefit of all market participants. So,
Great. Paweł.
Just to continue working on the interesting transactions, nothing else.
Excellent.
And as many as possible.
I'd like you to join me in thanking both yourself for your comments, but also our panel today. Thank you very much.